Our next presenter is Adrian Manz. Adrian is located in, I believe, Southern California. I have a signed copy of his book, Around the Horn. He's been doing this, again, for a really long time. He's going to talk about the 1 hour trader, and I bet that includes the Baltimore Gap strategy. The book that he has is actually called Around the Horn. I've got a copy right here, which you can't see. But the thing that I like about his patterns is he kind of breaks them down into like daily patterns, real-time patterns, things that you can watch during the day. And we went through and took all of the patterns out of his book, all of his visual patterns, and put them into a Metastock add-on. He is just one of the nicest guys. He's extremely tall. So there is that little bit of a detail about him. I can hear him laughing over there. Adrian, what do you want to tell us about yourself?
Well, I guess when we get into it, I'll tell them about my my strategies and my philosophy on this whole thing. But really, the thing that that everybody should keep in mind as you're watching what I'm talking about today is these are the things that we, and when I say we, I mean my wife Julie and I have done for the last 21 years now to earn our living. So that's us. We are both people who have a financial background and people who have an education background. So we both got MBAs and PhDs, and we thought we'd be teaching in a university somewhere by this time, rather than plowing ahead with our trading. But we started trading together when we were in graduate school. And, the rest has been just a great ride that, I can't even tell you how rewarding it's been. So, and I got to know Jeff, and I got to know a bunch of neat people over the years. So it's all been very good. So I guess, we're ready to start, or?
Yeah, I'm going to answer a question from Eric real quick. Eric says, Eric, number one, thank you for the interest in the software. It's just a quick question. How many laptops can I run your software on? I have 4 laptops. You can run it on as many as you want. The only kind of permission issue that you'll run into is if you try to run more than one at the same time with the same login. So as long as you're not using them on all 4 at once, you'll be fine. Adrian, the time's yours.
Okay. All right, so let me introduce myself again. I'm Adrian Manz. I have been around this stuff forever. As I said, my wife Julie and I, we trade professionally for a living. We've traded professionally for 20 years. We got into this when we were in our late 20s, and over time it's morphed a little bit. The strategies that I'm going to talk about today are primarily first hour trading strategies. That's because we went from wanting to trade in every time frame, wanting to trade, swing trades and day trades, and be in front of the computer screen all day long to try to sort of max out our trading empire, right? To saying, you know what, we make most of our money in the first hour of the session, and let's just focus on that so that we can go and focus on life, right? We've got a 10-year-old boy, and I can tell you that 10 years ago when he came into the picture, that pretty much changed the way that we looked at this whole thing. So we do a lot of, for those of you who know us, you know that we do an awful lot of traveling. We trade from all over the world. We homeschool our son most of the time. He goes to a school here in Southern California, and we live in Pacific Palisades, and he goes to a little alternative kind of a school. But for the most part, we are on the road a good chunk of the year, and we love it. So we've got a kid who's becoming a citizen of the world because of the business that we're in. We try to do education stuff everywhere that we go. Love doing the education. We've got a big boot camp that we do for about 20 traders twice a year. And that's all about getting those guys to be full-time professional traders, or transition from whatever business they're in to being professional traders. But for us, the first hour strategies have all developed over the course of 20 years of actually doing this stuff. If you want to have a look at what we do, or you want to have a look at how we've done it, then if you join us, if you take us up on a membership at the end of the seminar here, then you'll have access to every single trade that we've done since 2006 and every single trade that we've planned since 2006. So you can see exactly, you'll see as I go through this, I plan to the nth degree on everything. Every entry, exit, stop, and target is planned ahead of time. I put those plans out the night before for the guys we work with, and the next day we book the results exactly as per the plan. None of this like maximum favor rule excursion stuff, and none of the coulda, woulda, shoulda. We do it by here's what we planned, here's how the plan played out, and I think that over the years what that's done is given us the ability to go back and really give a good critical assessment to everything that we're doing. So if you're gonna trade anything, if you're gonna do any kind of trading whatsoever, then I recommend highly that you go to the greatest level of specificity on your trading plan that you possibly can, and make sure that every single thing that you do can be objectively quantified the next day, so that you can go through and say, yeah, I see exactly how this is performing, I see why it's performing this way, and I can see how to continue my success, right? Because for 20 years, I can tell you for sure, we graduated, got our PhDs, and we walked out the door and never had a day job. So this is what we've done since we were in graduate school, and about 2003 or so, we started teaching other people how to do it, and we just really love what we do. So now the strategies that I'm going to talk to you about today, I have written about these over the years in just about every publication in the industry. Those are just some particular things that were fun articles. Also, there's a book that a fellow wrote where he did an interview with a bunch of traders, breakthrough strategies of Wall Street traders, and that's a nice just sort of pedigree there of how many times we've talked to people without being in front of people about what we do. And then, of course, if you know me, you know that about once a quarter, or maybe even more than that, I address these very, very large groups of professional and aspiring traders. And we talk about what we do and talk about how they can do it too. So if you're coming to the Money Show in Dallas, I'll be there, talking about this stuff. I will be at the Traders Expo in Las Vegas talking about this stuff. And we've got a bunch of appearances coming up. I'm also going to be in Southern California for the folks at Metastock. So hopefully I'm going to see some of you, get to meet you. Jeff mentioned I also wrote some books about this. So Around the Horn, A Trader's Guide to Consistently Scoring in the Markets was the one that most of this stuff is based on. This is Around the Horn is written with a baseball analogy of some patterns that I saw in the market, and what it really does is follows the market around the horn, right around the cycle. So we are all about finding patterns that work in an intraday time frame and are based upon what the broader market is doing. What phase is the market in, right? Is it an accumulation phase, a distribution phase, markup, markdown? That's what Around the Horn was all about. I wrote that in 2003. Beat the Street and Trade Secrets, those are put out by Harriman House, and those are follow-ups to the original. But I'm going to say that if something's good and it works for you, you stick with it. And the evidence of that is definitely that everything that was in Around the Horn is still what we trade today. So with that being said, I want to get into these patterns. And what I'm going to show you today are 3 patterns that you can go through and find yourself. And if you have that Metastock plugin, then you can certainly go and scan for this first one. Right? There's a pattern in there called Fastball. It's an expansion to range, expansion to volume, and this is really a cornerstone strategy for us, right? This has been a bread and butter strategy for us. It's the thing that gets the cycle going. It's the thing that gets a market cycle going. When I say market cycle, I'm not talking about the Dow. I'm not talking about any one of the individual indices. We are talking about markets in sectors and in stocks. And my strategy is all about, when a certain sector isn't doing what you want it to do, right? When it's in an accumulation range or a distribution range, we want nothing to do with it. So we're just looking for markup and markdown. So the long and short, and when you get this particular pattern, this is the kickoff, right? This is where a market starts moving out of an accumulation, out of a distribution, and you get this thing called a fastball, expansion of range and volume. It's just what it sounds like. You're going to look for a big bar on the chart. You want to see the widest trading range of the past 10 sessions. You want to see volume being higher than average for the past 10 sessions. That's 2 weeks worth of trading data. And then in the case of a short, we want to see a move lower with a close in the bottom 25% of the bar and an open in the top of the bar. And then again, in the case of the short, we're just going to enter the following day 10 cents below that expansion day low, and we target underlying support and resistance, right? So what you should notice here is this is simple. Okay, it's a very simple system to follow. It's based on a ton of statistical evidence that we put together back in our grad school days, right? It's been valid ever since. It's all based on a big multivariate analysis of covariance. You know, when I first handed it to the publisher, he says nobody is going to buy something called a multivariate analysis of covariance of the U.S. equities markets, right? That's how it got to be a baseball analogy. But what I was very concerned about when I started trading was it looked to me like everything was trying to complicate trading. And the fact that all these indicators, all these things that were out there were attempting to say, you know, we're going to give you the opportunity to put your foot in the same river twice, right? That's a famous saying. You never get in the same river twice, because once you're in, you've changed things. Things have changed, and it's not going to be the same environment over and over and over again. But if you can limit this thing, if your heuristic is about making things simple instead of trying to complicate everything. I know it sells better to complicate things, but I'm telling you, if you can just look at price and you can just look at volume, you don't need a single indicator on a chart to tell you what's going on in the market. You don't need a squiggly line to tell you what happened 5 bars ago. You just go and look at what happened 5 bars ago. And that's been my approach to trading for all these years. Now, this right here is what that Metastock add-on module is going to scan for when it's looking for that fastball expansion setup. So I've got tons of this on the website, and if you come and become part of what we're doing, then you can certainly go back and you can look at every trading plan, right, for the last 12 years. So we're going to focus today, though, on a variation of this strategy. And the variation is called an XRV. So this is taking it and sort of putting it on steroids, right? The fastball setup, you'll see when you look at the results spreadsheets, that puts up undeniably incredible results every single year. So fastball has been profitable every single year since 2006 when we started keeping the records. XRV is something that we took and said, all right, so let's say we take that output that Metastock gives us, and then we go and we take that list of symbols and we apply some higher order analysis to it. And we go through and we use some of the alternative data feeds and things that are out there, and we can go and find out where exactly the institutions are participating, forcing this thing into a big range for the day, right? Wouldn't that be the thing that then would separate it and make it even that much more profitable? And in fact, it has, right? So what we do is we take the list of symbols that we have for the day, say 30 or 40 symbols that qualify as expansion of range and volume setups. We go through and we actually are book matching essentially where the market makers are buying and selling the stocks. You know, where are we seeing alternative display facility prints on the stocks? Where can we see volume aggregating over the course of the day? And does that then reflect in the support and resistance that we see on a chart? And we have this thing down to the point where it goes through, it looks and sees what the typical bid-ask price is it suitable for our trading? And then we've simplified this, right? And this again, simplifying it makes things better. It does not make them worse, right? If you can simplify something, it should always be as easy to carry out as it possibly can be. And what we did through, again, a bunch of statistical analysis, we figured out that targeting either the first floor trader pivot that's in our way or $1 per share in profit on these particular stocks, whichever comes first, that this has managed to lock in a very substantial profit for us almost every single week since we've done it. So we took out trying to go through and identify natural support and resistance for this iteration of this thing, and the result has been fantastic. So in this case, for a long position to trigger, what we require in our trading software, now this is now you're out of Metastock and you've moved over to wherever it is that you're actually executing trades, right? So for a long position to trigger, what we say is the stock's price first has to be less than or equal to prior session high. And for a short position to trigger, we want to see that the stock is greater than or equal to the prior session's low. So what this does for us is we automate things, right? Because our first hour trading, if you guys join us and you come in and work with us, first off, what you're going to meet are about 40 people who we've trained personally who trade together every single day. So they're in that room all the time, and the first hour trading pit, and they're happy to talk to you about what they're doing. You'll also see Julie and me, in our office pretty regularly, and what you're going to find out is, this is not a stress-filled environment because we have these orders put together before the market even opens, and they're set up to just execute automatically. So again, I want to simplify things as much as possible. And remember, I told you we were PhDs. We both have our PhDs in psychology. And I can tell you point blank that one of the best things you can do for your trading is take you out of your trading, because you're going to wind up second guessing things. You're going to wind up, deciding that maybe you feel like you've seen something before, and you better act on this here. And in the end, you wind up seeing a lot of things, and then afterwards having to punish yourself for reacting to those things. Whereas if you just put your plan together and set it up to execute, then what you have is something that's objective, and you don't wind up second guessing yourself and making yourself feel bad. Because I can tell you right now, one thing that I've run across in the 20 years that I've been working with traders is the psychological damage that has to be undone is tremendous. Because most people I meet will tell me, "Oh, I've been trading for 10 years. Well, how's it going?" "Well, it's all right." "Are you profitable?" "Well, sometimes I'm profitable, but I'm out there looking because I think I can find something that's going to make me profitable." And my response, a lot of these guys are engineers. I got an awful lot of engineers who gravitate to what it is that we're doing, and they want to over-engineer everything, right? They want to complicate the process. And by the time that we get done, what we wind up with is people who have simplified the process and are now able to trade profitably and get in front of opportunities for profit every day. So the volatility expansions, right? What is it that we're going to do with these trades once we set them up? So this is what the short sale would look like, okay? You have a stock that's making a trend, then it's got a pullback, right? Metastock scans for all this stuff. Then you have this expansion of range, hopefully an expansion of volume as well. And these are daily bars, right? So we're scanning for our entries on daily bars, because the bigger time frame is the thing that's going to push things in our direction, right? We want the weight of, you don't want to scan for the fastball setups, the expansion of range and volume setups on intraday charts, because an intraday bar that makes a wide range move that's bigger than the past 10 bars doesn't really mean that much. But on a daily chart, on a weekly chart, on a monthly chart, those big moves mean a lot more. Now for us, we focus on the daily chart for the setup, and that's because we're trading intraday, right? So we want to respond as quickly as we possibly can to these expansion moves in the market. So, right, if you're a swing trader, then what most of the guys who swing trade this stuff do is they bump out to the next time frame. So they go and scan on the weekly charts to look for the opportunities. For us, going to trade this intraday. I want to see what happened on a daily chart. I see that I've got this big expansion move to the downside. 10 cents below the low of that bar is where I'm going to enter the stock the following session on an intraday chart. Right? So if I break that low and I get anywhere 10 cents below that low, I'm going to enter that trade, and I'm going to be short on these XRV setups looking for $1 or the pivot, and whichever one of those two comes first is where our exit is. Our stop loss is still based on natural support and resistance, and beyond that, it's a first entry, a second entry, and then if there's going to be more entries beyond the second entry, it would have to be because the first and second entry happened within the first hour of trading, which is uncommon, right? So it's usually the case that a first and second entry, if they happen in the first hour, a third entry does not come up in the first hour of trading. But so here's one. I put examples in from this week. This is for all the strategies we're going to talk about today. We're just looking at samples of things that happened this past week of trading. This strategy, if you go to traderinsight.com and you look at the XRV strategy, if you're on the trial to that at the end of this, then you're going to see exactly how much it puts up in terms of points per share or dollars per share traded every single week. Last week was a light week. It did about $3 per share traded. On average, this strategy does somewhere in the neighborhood of $15 to $20 per share traded per month. So NEOG, this was one of the setups that we published, right? So this was out for our guys. There were 4 setups this day. This was the one that triggered. We see that, that last bar on the chart there, that is your expansion of range and your expansion of volume. So it's very easy to spot these things. It's in the bottom 25% of the range. It's a short sales setup. The volume expanded. You can see there in my trading software now. You can see out on the right side there, I've also got a volume profile, right? So I've got volume by price plotted out there. And I like to look at that on the setup day and see, is there significant pressure up above where I'm going to be getting into this thing, right? That's gonna push the stock lower. And I can see that big volume build there on the daily chart. So you've got heavy selling mid-range. You've got the following day coming up. You're trying to plan for it. And what are you going to look for next? You go to the intraday chart and you want to see where was that pressure when you only look at the one session that you're thinking about. So now you bump down, you go to a 5-minute chart. And on the 5-minute chart, we see all this pressure from the open on NEOG right down into the closing bell. It's almost a $10 range right on the day. So this is a very big bar for this stock. We can see that we have all this selling pressure going into the close. What that tells me, as a guy who's traded in, all sorts of circumstances, let me tell you, that is institutional buying and selling is the thing that pushes a stock that heavily going into the closing range. These guys are compensated. If you're ever down on the floor of the exchange, or if you're a former floor trader, right? If you're down there and you're working these trades, you're compensated based on your relationship to the VWAP, right? Volume weighted average price as a professional trader is what you're getting your kudos for, if you want to call it that. And what a panic at the end of the day, or what a big block order or series of orders at the end of the day tells me is, we have now become convinced that the volume weighted average price is moving lower over the course of the session, and that for the closing range, it's going to be even lower than that, and that we're likely to have a lower open tomorrow or a move lower off the open tomorrow. So it's time to do a little bit of cleanup. But when you see this kind of thing going into the close, what you know for sure is they didn't get done what they were looking to get done over the course of the day, and they're probably coming back for it tomorrow. That's what this setup tries to capitalize on. I'm trying to get you in front of opportunity in the first hour of the trading day to be there when the institution comes back and starts pushing the stock lower again. We're not looking to catch $10 tomorrow. All right, stock might do it, might do $10. We're just looking for the stock to move either $1 in our favor or to get down to one of those floor trader pivot lines where we know that price typically bounces. So here's how I set these orders up. And I told you I set them up ahead of time. So, you're gonna put together a bracket order, and what the bracket order here is telling my trading software. So I use Realtick. Somebody was asking about trading software and brokers. I use Realtick. There's software out there that is specific to a broker, and there is institutional software like Realtick that is non-broker specific. So what this software does is a great job of routing you into the order flow. It does not do all the cool stuff that Metastock does, right? It's not going to go through and do analyses and run simulations and do back testing and all that stuff. Realtick is trading software. So I separate my business into, I've got analysis software and I've got trading software, and Realtick and Metastock represent the best in both of those worlds. So what I'm telling my trading software here, this is before the stock even opens for trading, is it's a day order. Okay, so it's only this is gonna happen during the day. It would say day plus if it included pre-market. I'm not including the pre-market. And this day order is telling the Realtick servers in Chicago that once the market opens, right, I want to get short NEOG if it hits $73.48, and the worst price that I'm willing to accept is $73.38. So there's that 10-cent spread between yesterday's low and the entry price, right, the worst possible entry price that I'm willing to accept, about 10 cents from yesterday's low. And if I get in, I want to get out for 100% of the position that I entered, right? So if I traded 1,000 shares, I want to get out of those 1,000 shares at $73.88 for a loss. That's based on support and resistance. And I'm going to look for a profit at $72.38. Get me out for 100% of my position there. Okay, so that is the most basic automation that you'll ever see in your life. You don't have to write a big algorithm. You don't have to do anything. That bracket order is out there. It's got the entry. It's got the OCO. It's going to take care of my trade. The only thing that has to change over the course of the morning is if I want to go and trail my stop, I have to drag the line on the chart, the stop loss line, and move it lower. Or if a stock's making a big move in our favor and we decide, we want to go a little bit below that profit target, see if we can get an extension. All we have to do is grab that line and pull it down a little bit, and it's going to change that order up for us. But this is the automation that makes it possible for us to be very hands-off and very calm right around the opening bell. So everything comes with benefits and drawbacks though, right? So the benefits of doing your bracket orders, complete order structuring, and the OCO is going to kill the remainder leg, so you don't have to intervene at all. You can change the orders right on the chart, just like I told you, but bracket orders are going to impound assets as soon as the bracket order is placed. So this is different from a conditional order. If you put a conditional order out there, the conditional order doesn't hit your margin, doesn't grab your margin out of your account until the condition becomes valid, right? So if I say if last price is greater than or equal to $73.48, then start this order in a conditional order, my margin doesn't get impacted until that order triggers. On the other hand, with a bracket order, when I just put this out there and I say, look, if it's at $73.48, get me in, the bracket order, as soon as it hits my broker survey or server, the broker is going to go and impound the margin. So it's just a matter of structuring your workflow. Typically you're not going to, if you have 4 possible stocks for the day, right, you're not going to devote all your assets to a particular stock anyways. You're going to divide the assets in the account by 4, and that's how you're going to decide, what your trading day looks like. So it's not usually an issue for people, but you should know when you send your orders out and they are live on a server somewhere, you're going to have your margin impounded. So now here's how this one worked out. You can see it there. It went down through our trigger price, right? And this was on 9/26. We did these live in the room. It hit our profit target in the first 5 minutes of trading. Then it bounced up. It got up above that entry line. Our criteria for that is just if it gets 8 cents or more above the entry line and then comes back down through, get us in again and hit the profit target a second time. So your $1 profit objective was achieved twice. using this. And the nice thing about it is if you have that bracket loaded up and saved, you can just reload your bracket when price gets up above that line for you. So that is the basic Fastball setup. And you can also, on Metastock's site, you can see they've got a very good description again of the Fastball setup. Plus, you signed up for the seminar today, and there's a 40-page or 45-page or something book that you probably signed up for, a PDF downloadable ebook that goes into more detail on this strategy, right? I can't do it all in an hour because I'm doing 3 strategies today. But it'll give you more examples, give a bunch of examples, walks you through a bunch of these things, and really shows you, the power of this thing and how a simple strategy like this, where you're going through and you're analyzing expansion of range, expansion of volume, and then layer on top of that something a little bit fancier that still a machine is doing for you, can turn this thing into a giant winner. Because here's what XRV has looked like since January of this year. We limit this one. This is limited to 40 subscribers, and it was limited to 30 subscribers. So if you wind up joining us today, there's room for 10. And if you can't get in because there's no space, then we'll let you know if we open it up for more. But the most important thing to me is that my liquidity is not impacted since we're trading stocks. So as we add people, we always make sure that everybody is still able to get filled. If it winds up being the case that with 40 on board, we can take 10 more or whatever, then, we'll let you know if you hit the threshold today. I can tell you that everybody is very happy with the way that this thing performs. We give a money-back guarantee on the plan, and we have yet to have someone take us up on the money-back guarantee. So, and we've been out there with this since January. So Julie and I have been trading this ourselves for about 2.5 years now. And in January, we opened it up to our boot camp guys, to the alumni, the people who've been through the training. And now we're starting to take in a few people who are just starting to do it. But you can see there that, the worst month that it's had so far is September. September's been weird, bunch of geopolitical stuff going on, bunch of noise. But it averages about 17 points a month. So it's been a really solid strategy for us. The next one that I want to talk to you about is my gap trading strategy. So you heard Jeff refer to it as the Baltimore chop. That's because it looks a lot like an old baseball trick that was played back by the Baltimore Orioles years and years ago. This one, however, is, I'm going to go into the statistic here and just show you what it does and why it does it, just so that you know sort of what the backbone of my strategies look like, or why we're doing things. So we found out a long time ago, I did a bunch of research, bunch of articles and things on the nature of volatility. And when we started doing the Baltimore chop setup, the opening gap setup, we were looking for 2 standard deviations of average front month volatility for each of the stocks on the exchange. And that wound up being, even for, using a bunch of, computers with Xeon processors and all this stuff to do the number crunching, wound up being taxing to do that every single day. Then we figured out that, really when you're looking at gaps, the thing that you're looking for as a proxy for volatility is really the gap. And that true range, which is the greater of the high minus the low, or the high minus the previous close, or the low minus the previous close, that's a real good proxy for volatility. Because when you're looking at range, right, the range of a stock is just the high to the low. And in this case, the true range is the high minus the closing price of the previous day. And what that gives you then is the range including the gap. And when you do the statistical manipulation on this to figure out, all right, is this a gap that's likely to revert? Is it likely to fade? You get yourself into a very high confidence interval, because the thing you're measuring with the statistic is actually the thing that you're looking for, right? So in this case, if we had a 50-10 high and the previous close was $49, got a $1.10 true range for that period. And then, you know, what this all works with as a model, right? And when we work with you on your trading, we're not saying you have to go through and know about a normal distribution, and you have to understand that, you know, true range and volatility are things that fall into the normal distribution, right? That's normally distributed data. The important thing to know here is volatility is mean reverting, true range is mean reverting. That gives you access to this thing, which is the normal distribution. And what that tells you is, if you can take the true range and derive an average for the gaps, what you can do by going out 2 standard deviations is put yourself right in the 95% confidence interval that there is going to be a reversion toward that mean. It does not guarantee you're going back to the mean. It does not say you're going to close the gap. What it says is 2SD out, you have got a very, very high probability that you're going to move back at least towards the 1 standard deviation line. So what our software does for us, okay, and you can do this with, you know, some complicated programming. You can move everything from just about any piece of software into Excel and do the calculation, right? But you're just going to calculate true range in your trading software for days 1 through 10. Let's use a 10-period true range. It has to be true range, not average true range, right? So if your software only does average true range, just change the look back period to 1 day. And then for each day, you'll have a number. Then what happens is, this gets plugged into, for you engineers out there, this is a simplified standard deviation formula, right? We're only looking at 10 samples, so that denominator there is n, not n minus 1. So nobody read me the riot act about that when we do questions. But you're just going to go and plug these numbers in here, and you're going to say, here's all these x values. I'm going to subtract the average from every one of those values, right? Then we're going to square it to get rid of a negative number. We're going to divide it by the number of samples that we have, 10, and what that's going to give us then is a number that when we take the square root of it, gives us 1 standard deviation. So when we talk about these opening gaps, when you come in and you're looking at us during the trial and you're trying to figure out what it is that makes this a qualifier, we've gone through and calculated 1 standard deviation is 49 cents, 2 standard deviations then would be 98 cents for this particular stock. You would add that 98 cents to the $1.25 mean, okay, and then that value that's how much it has to gap the next day in order to qualify. And then the setup is really easy. This just looks like a standard pullback, okay? You get, these are 5-minute bars. So the prior session, you had this move up into the close, then you had a gap down. It's a 2 standard deviation gap, right? Your software tells you you're 2SD out, true. It's a long entry because you gap to the downside. You're looking for a move higher. And in this case, what you're doing is you're just looking for these descending highs until you get, you know, a bar that's down there at the bottom, like this one, right? So it looks like a pullback. And then we just look to get in just a few ticks above the high of the deepest bar in that gap, and we're going to target either the open or the high of that first bar of trading. That's going to be our profit objective. And if that sounds complicated, you know, it's not. I mean, you can learn how to do this, and you definitely know along the way, right? You're just constantly changing your order a little bit. You're saying, okay, second bar, that looks like it's the deepest bar when the second bar is forming. When it's not, you just go pull your order down to the top of the next bar. When that's not, you just pull the order down to the top of the next bar. It's very methodical. And you'll see in the first hour trading pit, we've got a guy, his name's Rick Kipp. He, when we met him, he was a TSA agent at the airport, wanted to know what it was that we did and what our boot camp was all about. This guy said to us, look, if I can make $300 a day trading, I will attend this boot camp. I'll pay $10,000 and go learn how to do this. Came, did the live training with us for 4 days, did the online portion of it for a couple of weeks, right? It takes a couple of weeks to get through the Income Trading Academy, and then the live part of the boot camp follows that. He does this one strategy for a living, and he's done it now for the last 5-6 years. And he's in there every day just talking about what he's doing. He's not compensated for being in the room. He is just one of the alumni who are in that room talking about what they're doing to earn their living trading stocks every single day. And this is what our scan looks like in the morning. So what we've done is, we separate out the S&P 500, the 400, and the news-based gaps, and that gives us then, right, we've got, in this case, you got about 10 stocks you're going to look through. This gives you lots of time. You're not entering in the first bar anyways. This gives you lots of time to just copy this stuff over into your trading software and start flipping through the charts and figuring out which one of these symbols it is that are going to give you that nice orderly entry. And in this case, right, we wound up with Norwegian Cruise Lines. And Norwegian Cruise Lines, this one gapped down, and then you can see that the deepest bar in that move to the downside wound up being right there at $54.14. That was the high of that bar. So in this case, we had a stop loss down below the low of the bar that triggers us in. That's also below the close of the prior bar. So we've got nice confirmation there as to the fact that something meaningful happened there. And if you look out on the right side of the chart, you see there was a ton of volume right there. So if it violates that line, I'm going to get out. And the target up there at $55.56. So can you shoot for the pivot line? Absolutely. My experience, really is that if you can contain it to that, if you can set up a trade that looks right when you structure it, right, where you put your trade together and you say, look, this one I'm getting in at $54.14. The worst price, I'm going to take $54.20. I've got a potential profit, $1,360 on this size position, and a potential loss, $260 on this size position. Then when you go through and you look at the other stocks on those lists, what you're going to see is this is the one that's setting up the best, right? So this is the one that it makes sense to take. And you will see every day, Rick just sort of filtering through these things that way, very methodically, coming to the conclusion, this is the one, or these are the two that I'm actually interested in. And that is then that opening gap trade in a nutshell. And then the last one that I promised Jeff I was going to talk about today are the super cap volatility band setups that we do. This is going to look really simple to you, and it's actually probably the more complicated of the trades that I do. This I put it out as it's called the NASDAQ scalper trading plan. When I put it out every day, you can see here that we had Apple, we had Netflix, we had Tesla. You can see that the bands on Tesla accounted for the fact that Elon Musk stood to have some problems. So those bands are significantly lower than the prior day's trading range. So when I'm talking about how I set these bands up, just bear that in mind. Tesla, I was actually looking at the post-market reaction to the news that he was going to be pursued by the SEC, and that's where I was developing those bands from. But Apple provides a really good example of how I go through and figure out what I'm going to do with Apple the following day. I trade Apple almost every day of the week, and Apple tends to trade in these very narrow bands of volatility. You can isolate them by volume, you can isolate them by price movement, and what you see here is I've gone through and identified support and resistance bands that are going to bracket the volatility over the course of the session, right? Where's most of the volatility contained? Where is 90% of what's going on with the stock that day happened within those bands. And then when I see those inflections at those bands, those things then become where I'm planning my trades for the following day. So on that last graphic, you saw the actual plan that sits on my desk, that sits on the traders' desks who are using it. And then the following day, right? What we're looking to do is trade right through those volatility bands when the stock goes and inflects there. So in the case of Apple, what we really do is we look for price to come down through one of the bands from above and then move back up through. So we had 224.97, right? That one's red because it's sitting right on top of a pivot line, so don't be confused by that. But I'll look at the pre-market to see where is it trading, and if it's trading right below 224.97, we've got a trade on the open, 224.97 up to 225.93. If it's trading pre-market between 225.23 and 225.49, then that order would go and just say, get me in 225.49 up to 225.70. But over the course of the day, the way that this thing plays out is just that we keep looking for small violations under one of the lines from above, in this case, because it's a long, it would be the opposite for a short, reverses back up through the line, I take the entry, exit at the next line. If it dips below that next line again, you've got another entry up to the next, up to the higher level. So you can see there where, 225.23 had a move up to 25 spot 49. 25 spot 49 gave you another opportunity for an entry up to spot 70. So that is what looks to be a very simple strategy, right? It is a very simple strategy if you've been doing this for a long time and you're used to looking at these things. I will tell you that of the three things I showed you today, even though the two standard deviation gap strategy might have looked complicated, this right here is the hardest thing to trade. So when we get people who are interested in doing this, what we do is steer them straight towards a trading simulator, and we just have them simulate the heck out of it, right? Go back and do simulations, going back, take all these plans for the last 2 years, just go and simulate, the first hour of every single day, and, make yourself crazy, but get good, because it's all about putting in the reps on this kind of a trade. Very, very easy to misread the dips below the lines, very easy to misread the cues that you're getting, but if you practice it enough, you can do it. Right? I tell people all the time, I can teach you how to do any of this stuff, but you have to be willing to learn, and you can't tell me that you have to put your money into it tomorrow because you got to pay the rent or whatever it is, right? You have to be able to go and put some time in to make sure that you can do it in the simulator, and once you get the simulation down, that's when you migrate over to the regular market. Because I can tell you, one of the guys who came to boot camp, he saw me do this at the boot camp, and he says, that's what I want to do right there. I'm gonna make $5,000 a day trading Apple. I just know it. I'm just gonna get in. I'm gonna go in heavy. I'm gonna stay heavy. And I said, let's have you try and simulate this for a while. And last week, John, if you're here, I'm gonna call you out. John says, I've got it down to where I can book about a $500 profit on the simulator in the first hour of the day every day. I'm comfortable with this now. I said, what happened to the $5,000? He said, well, what $5,000, right? So he became a realist very, very quickly. So that's with all these strategies that I'm showing you, with everything that I've talked about today. I'm going to say it again, practice makes perfect. Practice is the only thing that's going to get you in front of opportunity on a regular basis. Do I believe that everybody asks me, right? People ask all the time, do I believe you can be taught to trade? Yeah, I do believe it. I've taught plenty of people how to trade. I've taught a lot of people how to trade over the years. Is it something that happens from one day to the next? Absolutely not. Anybody who tells you you're going to learn how to trade from today to tomorrow is selling you a work of fiction. You have to go and put a lot of time in, and you also have to be willing to say, if you're working with something now and you've been doing it for 5 years and it's not profitable, you've got to be willing to say, I need to go and have a look at what I'm doing and maybe move on to doing something else. So that's my 2 cents worth of wisdom there. Here is our MetaStock offer, right, for the summit folks today. I do have a special offer for you, and then we'll take some questions. That XRV plan that I was showing you, that XRV thing is the thing that people tend to gravitate to. They like it because it's this first hour stuff. I'm going to set that up as the special here. It's normally $299 a month. And if you do it, we'll include the second month for free. Here's the caveat with this whole thing. You don't have to send me trading records. You don't have to send me proof of anything. If you don't like it, just tell me. I would rather have the space open for somebody else than have somebody in there who doesn't get it or doesn't want to get it, or it's not for them. If you don't like this during that first month, just let us know, and there's no problem, no hard feelings. You just get your money back and you're done. So that is our commitment to this. We want to make sure that everything is a good psychological fit for anybody who ever works with us on anything that we're doing. You're going to get my best setups presented exactly the way that Julie and I are going to trade them the next day with our own money right in front of you. So we're going to talk you through the trades. We're going to talk to you about what it is that we're doing. You'll have membership in that live coaching first hour trading pit for the whole life of your subscription. So if you stay with us for 5 years, God bless you, then you'll be in there with us for 5 years. You're really going to get to know Julie and Adrian and Rick and Goran and Brenda and the whole bunch who's in there, because they've all been around for a while. I also publish daily videos on every one of these setups, going through and saying, all right, here's how we handled the entry, the target, the stop. Here's where I was looking. Here's what I was seeing here, 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 and here. That gives you then the ability to tinker and see to it that your practice was correct, and then maybe go back and simulate things and try to figure out, if I work on this, am I getting closer to the guy who developed it, right? Can I figure out, where I'm making mistakes, or how to push this thing even further? Every week on Saturday, we do an online seminar where we answer everybody's questions. Those used to be a lot more active than they are now, mostly because these guys have been on it for a year, so they don't have all that many questions anymore. But if you're new to it, you submit 10 questions over the course of the week, and we're going to answer all 10 questions right there every Saturday, and it's recorded, and it's out for review. And then also a free live one-on-one coaching call with me to help you get up and running as quickly as you can. So you can just save that for whenever you need it. If you want to talk to me about, geez, I've been on this thing for a week now, and I'm looking at it, and I've got a couple questions, and can we have a little powwow? I'm happy to get on the phone and talk to you. And I'm also going to include the scalper plan and my just around the horn trading plan for a month, so that you can go through and look at all the results from all the years. You can see all the trading plans going back to 2006, and you can go through and you can figure out, geez, this looks like something that I could do. This looks like something I want to do. This looks right for me, and you can make the decision yourself. You can figure out if this suits your psychology and your personality as a trader. So to do any of that stuff, you just go to traderinsight.com/summit. It's right there at the bottom. And, the little video there describing the XRV thing, and a bunch of information on, all the benefits of working with us. We are a tiny company. We have less than 100 clients. That's how we want it. We do this because it's a passion for us. We enjoy working with people. We are not looking to grow this to 10,000 people. We're not looking to grow this to a couple thousand people. We like working with the people we work with and knowing the people that we know. So I think if it winds up being a good fit for you, you're really going to like it. So let me see, are there questions? And if there are, I can answer them quickly. I know I have to yield the time here, and if not now, I just see some general comments. You enjoyed what we're doing.
We did have one question I promised to ask you, Adrian.
Okay. Yeah.
If you can hear me. And I can't remember who asked this, but it was a while ago. But the question was basically, so you just trade for an hour and get out after the first of the hour, or do you just leave stops on and leave?
So if we're in the position and it's and the first hour has expired, we just leave the automated trade out there, and some of these will wind up playing out over the course of the day. We do try to fully automate everything, and if that means that the trade winds up staying open until until 9 o'clock our time, until it doesn't matter to us. It's just did it trigger in the first hour? And if it did, then it's going to go ahead and play out over the course of the morning. 99% of what we do is over and done at let's say 10:45 Eastern.
Do you have any recommendations about minimum starting capital?
I think there's a bunch of ways that people do this stuff. I mean, there's people we've worked with who have gone and opened the the highly levered like offshore accounts, and I tend to advise against that. I think that it's better to have $30,000 in an account so that you have working capital, and then you just assign whatever small portion of that is risk in terms of minimum, right? You're not risking $30,000. Do not ever risk every penny you have on a trading strategy. But what you're doing is you're saying $30,000 allows me to work with something. I've got finite risk here. I've got defined stop losses. I know I stand to lose, let's say you're trading 100 or 200 shares. I stand to lose $50. I stand to lose $100 on these trades. And the portion of your trading account that you define as risk capital is the only risk you should ever be willing to accept. Never, never, never trade with, money you need to pay your mortgage or pay your rent. What you want is to have the additional capital in there. That's the stuff you should think about. Okay, so I need $25,000 to satisfy the SEC, the PDT requirement. How much more do I want to put into my account so that I can lever up? How much more do I want to put into my account so that I have additional capital, additional risk capital? That's the part that's up to you. But if you want to talk about it personally, you guys can also call me, right? So it's I'm always happy to talk to people. So I'll even give you my number. It's just 310-804-2248. That's my cell number. So please send me a text first saying, you'd like to talk to me about this stuff. If you want to talk about, whether or not trading is appropriate for you or intraday trade, I'm happy to talk about any of that kind of thing, or just trading in general.
All right. So a couple of comments. One of the top this was one of the top presentations of the day. Paul says, this was great, thanks. Eric says, I just bought it. I look forward to using it very much. I'm in. So thanks for that, Eric. Do you want to repeat your phone number for Khurshid?
Absolutely. 310-804-2248. Please remember I'm on the I live right at the beach on the West Coast. I am as far west as you can go. So remember that when you're thinking about what time to call me. Please don't call me at 3 in the morning. But anytime between sort of 9 a.m. Pacific time and 7 p.m. Pacific time, shoot me a text and tell me you've got a question and you'd like to talk. Just tell me what your name is, and I will text you right back and tell you I'll call you in 10 minutes.
Jamie asked this, and somebody else asked this earlier, but they say, do I need the Metastock software? My answer before will be the same answer as I give to right now. No, you don't need it, but you should definitely consider picking it up. And I do mean that. Metastock's such a great software program.
I think it's a terrific tool, and I think that more than anything else, you guys, if you're thinking about Metastock and you're thinking about these plugins, what I've seen over the years is a level of responsiveness from the guys at Metastock that you just don't see anywhere else. So if you have problems, there's somebody there to answer the question, and the software itself is probably some of the most reasonably priced stuff out there, and it really has the horsepower to do some pretty amazing things. So if you're looking for analytical software, I would say it's probably the best stuff that you're going to lay your hands on.
Okay. All right. Well, and thank you everybody for the feedback. Adrian, thanks for your time. I appreciate it.
Absolutely. And I guess I'll see you in Southern California. Is that true?
Yes, I'll be down there.
All right. It's fantastic. We're looking forward to seeing you again.
I do want to spend, thank you very much, Adrian. We'll talk to you soon. I do want to spend just a few minutes talking about the add-on that we built for Adrian. And we did this a number of years ago, but it's quite a good one. And I just want to show you how easy this stuff is to use. And we're already a little bit over time. But that's okay, because there's only 2 presentations left. And the next presenter is actually sitting right next to me. So it will be okay. And then I'm the last presenter. So we'll go maybe about 5 minutes over just showing this part of it. So in any case, you guys should be able to see my screen. I'm going to make a small audio change right now because it seems like a good time to do that. So I want to make sure you'll be able to hear me. So. All right, so I should be broadcasting again. I'm going over to the nicer microphone that I don't have to wear on my head, simply because the next speaker, like I said, is in-house, and I'll tell you a little bit about him in a second. But I do want to talk a little bit about the Around the Horn. As I said earlier, it's based on the book. It's broken up into intraday and end-of-day patterns, and here's a list of what it scans for. And you guys have kind of been one of the questions was, can I use this in London? And with Adrian stuff, I don't think you can use it on London stocks, but that's the nice thing about the add-on is we can go in and we can run a scan against anything we want to, and it will work on just about any markets that you want. So I'm going to go ahead and go into just a bit of a Dow chart. I'm going to go ahead and close the expert commentary. Actually, this isn't the Dow chart, but I just want to kind of show you how easy it would be to find patterns with this thing. So I'm going to go ahead and open up our Power Console. I'm going to go ahead and click on the scan. I'm going to go ahead and click on the ATH Fastball right here, and we'll just run this against the S&P 500 list. Again, if you wanted to find something in London, you just go into Europe here. We do have London Stock Exchange and London Mendel Exchange. Find the exchange that you want to run and scan it. But because we're over time, and it's really more the concept I want to give to you today, I'll just go ahead and start the scan here on my local S&P 500 folder. So if I'm looking for symbols today, this is all I'm going to do. I'm going to look for the Fastball pattern. So that's the scan that we're running. The reason I'm running that scan is because Adrian talked a little bit about it. You'll notice it's done already. So now we have a list of some stocks that we could either look to go long, these ones right here that have a 1 in this column, or the ones that we can look to go short, okay? And this is how I found this stock. I just opened up, I ran the scan while Adrian was talking, and here we have a scan of the Fastball pattern, okay? And just like the other ones, if I want to kind of understand, and you can see exactly where this buy came in, where this sell came in, where these previous buys came in, just like with both of the other add-ons, if you wanted to look at the commentary, just click on View, Expert Commentary here, and I'll go ahead and put it on the current bar. It's going to give you the complete instructions. So again, we went from 500 stocks to 4 we could take a potential long opportunity. Again, that's going to save us time in terms of finding the stocks that we want. And here is telling us very specifically where we should look to enter the order, where we could put the stops out. This add-on, for what we charge for it, and I'll get into that just right now, it's only $200, $299 normally. If you've got Metastock and you want to take a look at it, you can buy it. It's $199 here today at the Online Trading Summit. You can give us a call at 800-882-3040, or you can chat online with us at metastock.com/saleschat. It is part also of the Trader's Toolbox that we've been talking about all day. Thank you for all of you that have actually picked this up today. But and one of you were in London, so I think that's from the London, probably the same guy, but maybe another gentleman. In any case, you can get all 4 add-ons, Ichimoku Master. We're about to talk about that. Adrian Manz Around the Horn, the Joe Duffy Scoop, the Steve Bigelow Candle Profit Systems, 2 years of access to Stocks and Commodities Magazine, 3 months access to Metastock Real Time, 3 months access to Metastock Zenith, the boot camp that I'm going to do next Thursday to show you how everything runs. We'll spend about an hour in the software, and I'll just show you as a new user how to go through and get everything running. That Unleash the Power of Metastock course that we're talking about, and of course the one-on-one installation call, what we call the white glove installation, but they'll get you on the phone and they'll help make sure that they'll install everything and they'll take you through it step by step. All purchased separately, this would cost you $2,596. Here at the summit today, you can get a special pricing of just $1,596. So give us a call at 800-882-3040 or chat online with us at metastock.com/saleschat to take advantage of that. I do want to thank our sponsor today, Stocks and Commodities Magazine. Again, one of the things I think is key about trading is coming to education events like today. The thing I like about Stocks and Commodities is every month you're going to get a dozen or so good ideas about different ways to look at the market with this magazine. When you registered, you should have you had the opportunity to get a free copy. I've been pasting the link. I'd encourage you to at least get the free copy. And I want to thank them for including as part of our bonus offer or our action pack today, 2 years of Stocks and Commodities. They've been great partners, very well-run company, and I recommend them all day long. So let's go ahead and kind of transition a little bit here.